Okay, so the last part of question C asks us to calculate the total budgeted profit for the business under this scenario. And then the variable costs were necessary to take account of the revised sales and production volume. So to calculate the profit, again, we're going to do sales revenue, which we've calculated as 1.96 million, 408. So we have to then take away the total costs. So we get the variable costs as before. Then we add on direct expenses to get total marginal costs. Then we calculate the contribution, take off the fixed costs and get the profit. But the way to do this, the easiest way to do this is if we get the variable costs for each of the individual units. So to get the variable costs per unit, we calculated these way back at the start. So in part A, we calculated the variable cost per unit. So we've seen it was £63 per unit for Balzac, 96 for Hugo, 92.75 for Voltaire, and 51 for Zola. So we can take these down here again. We've got the variable cost for each of the units. So 63, 96, 92.75, and 51. So we're going to use these to calculate the total variable cost, which is going to be the new amount that we've sold times the variable cost per unit. So the total number of units of Balzac we've sold is 1,039. We multiply that by the variable cost per unit of Balzac of 63, which gives us £65,457 for sold of Balzac. It's the total variable cost of producing Balzac. The total variable cost of producing Hugo is going to be the new sales volume of £4,156 multiplied by the variable cost per unit of £96, which will give me £298,976. And I'll do the same for Voltaire and the same for Zola to get the total variable cost of these components. So again, it's just for Voltaire, it's just going to be the total sales volume multiplied by the variable cost per unit, give me the total variable cost of producing Voltaire. And same with Zola, it's going to be the volume of Zola that's produced times by the variable cost per unit. So once I've got each of the variable costs, the total variable costs of making each of these components, I can get the total variable cost by adding up the variable cost of each of these components. So the 65,457 for Balzac, plus the amount for Hugo, plus the amount for Zola, and plus the amount for Voltaire. So you can get the total variable cost to the company of £1,078,716. I then add on the direct expenses to get the total marginal cost. And the direct expenses, again, it's the cost of hiring the machine. They haven't changed from what they were before. So they were 10,000 for Balzac, 2,500 for Hugo, 8,000 for Voltaire, and 22,500 for Zola. And they're just going to be as they were back here, 10,000, 2,500, 8,000, just the same as they were in the question. So they haven't changed. So they're just going to be the same numbers here. To get the total marginal cost, it's going to be the variable cost plus the direct expenses. So we get total variable costs, add on direct expenses to get total marginal cost. Then once we get the total marginal cost for each of them, which again, it's just going to be these added together for each of the components, total variable costs plus total marginal plus direct expenses to get the total marginal costs. I can then get the total marginal cost to the company by adding up each of the individual total marginal costs for making each component, which should give me 1,121,716. I then want to get the contribution for each of the units. So the contribution is going to be the sales revenue, take away the total marginal cost. So for Balzac, the total sales revenue was 120,000. The total marginal cost was 75,457. The contribution is going to be the total sales revenue, take away the total marginal cost, which will give me the total contribution. For Voltaire, it's going to be the £1,850, take away the 489,836, which will give me £511,014. Do the same for Hugo, same for Zola. I've got contribution for each of the units, This one's going to be negative. So we've got negative contribution because it's costing more to produce than, it's costing 401,000 and a bit to produce, and it only costs, we're only getting 400,000 and a bit from it. So one slight negative, but we don't need to worry about that. We then get the total contribution for the company, adding up each of the individual contributions, or to get the same number, we can do the total variable cost minus direct expenses to get total marginal cost. Then we can do the, to get the contribution, it could be the total sales revenue, take away the total marginal cost to get the contribution. But once we've got the total contribution, adding up each of the individual contributions, we then take off the fixed costs, which are still what they were originally, the 80,000. We can see still 80,000 here. So we then take off the fixed costs of 80,000. So we get the contribution of 574,000, take away the fixed costs of 80,000, which leaves us with profit of 494,691. So once we've done all that, then we've got from part C, from all the jazz that was played out there, at the end of the day, we ended up with £494,681. And once we've done that, we've answered part C.